Hello, friends. Uh, Sorry, I think there was a little technical issue, and we took, I think about 7-8 minutes to set that up. Suddenly, there was a connectivity issue, so keep reminding we keep reminding ourselves sometimes that we are in a developing country where things are not perfect, and that's the beauty of why we have to struggle to make things good and be comfortable with those, even though they are not perfect. All right. So I'm really excited to discuss today with you about Caro 2013. As you know, Caro 2013 is quite an important topic even from exam perspective. So as I see the kind of curriculum, the weightage what Caro had in different examinations, I see that in some examinations, I'm just talking about particularly the last 5 years, where Caro got tested for as high as 11 marks out of your 100 marks paper of auditing. So that goes without saying that Caro is something which we need to be super thorough with as a part of our CA curriculum. Now, how are we going to go about with this discussion? A lot of times people just mug up those clauses of Caro, don't know why those clauses came, don't know why Caro came. They just remember and go and write something. But there's no fun in that. So we will spend the first 10 minutes of our discussion to understand why we have Caro and the uniqueness of what Caro does, which we don't have in any other aspect of our financial reporting and kind of communication, what we do to the users. And after understanding the reason as to why we need Caro, when you look at all the clauses of Caro, everything will start making sense because you know exactly why you are learning Caro. So the clauses of Caro will start making sense. So let me get started. So what is the need for something like Caro? The users of financial statements already have balance sheet, P&L, audit report, all these things. Then why Caro? What is the need for Caro? So audit report is already there, right? So what is covered in Caro? What gave rise to people asking for Caro kind of requirement when the other financial reporting aspects were already there, when other audit related aspects were already true and fair view. All of us know that, whether financial statements reflect a true and fair view. This is what we talk about. Now, when we say financial statements reflected true and fair view, what is true and fair depends on person to person. For example, I am a banker. I'll ask a straight question. For me to feel that financial statements are true and fair, answer whether the company is paying loans properly. That's all. Then answer whether the company is repaying, whether the company is using the money what it raised for loan for the purpose for which it raised. So it's a very specific question what the banker has. Similarly, the people who invested into company, say recently company went for public issue of shares. The people who invested into the company, now they have a very, very specific question. The specific question is whether the company used money for the purpose for which they told and took money. So maybe when the company went for public issue, they clearly said, we are raising money for the purpose of purchasing a new factory. That is what was told, and company went for public issue. Really, did the company do that, or did they use money for some other purpose? That is exactly what the users want, or the shareholders who invested money into the company want from this particular company. So the beautiful thing about Caro is this. These specific questions, not generally everything is true and fair, that is all okay. But that specific question, Arey bhai, bolo, itna to bol do ki this point, is it happening well or not? This specific point, is it happening well or not? So for that question, you don't have an answer in our regular audit report. Friends, that is exactly the reason why users came up with something called as Caro requirements. So what are the kind of points covered in Caro? Think about it. Who are all the users of financial statements? Equity shareholders or preference shareholders, debenture holders, bankers. When I say shareholders, current shareholders and even future shareholders, like prospective shareholders, I mean. Then bankers, those who already gave money to the company, those who are yet to give money to the company, both will be covered in that. Then you have somebody like government. Government is also an important person who reads the financial statements of the company. Then when you have this range of people who want financial statements, who want to understand what is happening in the company, Caro answers those specific questions what they have. What are the specific questions? As I told you, things like, hey, is the company paying taxes? Government says, what is true and fair to me?
true and fair word makes absolutely no sense unless you answer this question, is the company paying taxes? All right, friends, for our friends who joined in on YouTube as well as Facebook Live, I encourage you to share this link with your other friends who you think will be benefited from this discussion on Caro. And we are going to have a fantastic session for a little more than an hour on how Caro has to be approached, the core concept of Caro, and how you have to approach Caro from your exam perspective and also from your real life perspective. Right. So quickly share so that your other friends don't take too much of time to join in. Right. So coming back, this specific question, like as I said, government wants to ask this question. Hey, is the company paying taxes? If the company is paying taxes, according to us, that company is okay. So that specific question, who is answering? Is the management answering? No. In the notes to accounts, you don't have any place where answer to that question can be found. Similarly, you don't have an answer to that question in the rest of the audit report also. So that is why in Caro, you have these very focused, laser sharp questions, I call them, and the auditor has to answer them. Now, one important point what you have to bear in mind is in Caro, the auditor has to answer whether the company followed that clause or whether the company violated that clause or whether that clause is not applicable at all. So I'm talking about three categories. If that clause, say for example, we talk about frauds, that is one of the clauses what we have. So if the question is about fraud, whether there was any instance of fraud noticed, etc. If there is a fraud, you have to talk about it. If there is no fraud, you have to write that. If that clause is not applicable, well, if you would say in this case, yes, there is fraud or no, there is no fraud. But you also have clauses like for something like for the Nidhi companies. So it's a non-banking finance company. Only for such non-banking finance company, that clause regarding Nidhi companies will be applicable. Now, if it is a Nidhi company, is that clause followed or violated? You have to answer. If it is not a Nidhi company at all, then you will not say followed or violated. You will simply say that clause is not applicable. The point what I'm trying to make here is, if it is applicable, verify and write whether it is followed or not. If it is not applicable, verify, and if it is not applicable, communicate that so and so clause is not applicable at all. So if it is applicable, not followed, write specifically that is applicable, but it is not followed. The reason why I'm emphasizing on this is you have something called as auditor's duty to inquire. What is this auditor's duty to inquire? We have this list of points like loans and advances made by the company, whether they are prejudicial to the interest of company, etc. So we have a list of some 6 points which we look at. In those, I'm talking about those inquiries, auditor's duty to inquire. Auditor will have to communicate something in the audit report. Auditor has to give something in the audit report only when there is a problem. If everything is okay, auditor need not talk about that in the audit report. But when it comes to Caro, there is a difference. Auditor has to check, followed, write that. Not followed, please write that. If it is not applicable at all, then please indicate that so-and-so clause is not applicable for this particular company. Friends, I hope you understood what I mean by this unique difference between auditor's duty to inquire and Caro. Okay, right. Now, let us start moving into the other points. Caro is applicable to whom? You may ask me, sir, we are sitting in a session on Caro. Why are you talking about applicability or non-applicability? But as you know, Caro applicability, non-applicability got tested almost 35% of the times. So out of the 100 times that Caro question came, so third of the times only applicability or non-applicability got tested. That is why you need to know the applicability, non-applicability properly. Right. So Caro is applicable to whom? Applicable to all companies, including foreign company as defined under Companies Act. And it is not applicable to whom? It is not applicable to, we have a list. Our banking company, insurance company, Section 8 company, small company, then one-person company, all these things what we have. So you have those lists. Now, I'll talk about that special point under non-applicability. Friends, concentrate carefully. A lot of times, this is the point where people make mistake. If it is a private company, which meets certain conditions, Caro is exempt. If it is a private company which meets certain conditions, Caro is exempt. Means Caro is not applicable. What are the conditions? If it is a private company, right? And it's paid up capital plus reserves less than or equal to 1 crore, right? And it's the borrowings, basically loans borrowings less than or equal to 1 crore and turnover less than or equal to 10 crores. Then Caro exempt. Now that's all the clause says, but there is more to it. How do you understand this clause? There are 4 conditions. If all the 4 conditions are met, Caro exempt. Even if one condition is not met, Caro applicable. I'm repeating. If all the 4 conditions are met, Caro exempt. Even if one condition is not met, it could just be any of these. If just one condition is not met, Caro applicable. So the way you have to look at it is paid up capital plus reserves less than or equal to 1 crore, less than or equal to 1 crore. If it is less than or equal to 1 crore, fine. Now, when I say paid up capital, is paid up equity share capital considered or paid up equity and preference considered? Both. Paid up equity share capital, paid up preference share capital. These kind of important subtle points students generally miss out. So I have to focus on those so that you don't make mistakes in such points and you get full marks. Right. So when I say paid up capital, it is paid up equity share capital and paid up preference share capital. Are you clear about that? Then, sir, what about share application money? Share application money is not paid up capital. So share application money will not be considered. Did you understand that? Share application money is not paid up capital. Share application money, what you receive, will not be considered for this purpose. Is it not very important to understand? Because simply we say, Caro, paid up capital plus reserves less than or equal to 10 crore or 1 crore. But what do you mean by paid up capital? That you have to be clear about. Acha. Then, sir, what if the company has issued some shares and those shares were subscribed to, something like the share was for 10 rupees. The shareholders paid 4 rupees, 6 rupees was yet to be paid. We made call, the shareholder did not make payment. Then, as per the articles of association, the company forfeited those shares. The question is, sir, in such cases, will that 4 rupees, whatever was paid by the shareholders, will that be considered for the purpose of Caro? See how beautiful this point is. I'm repeating, understand carefully. 10 rupees is the value of share. 4 rupees paid, 6 rupees not paid. And later the share was forfeited. When the share is forfeited, should that 4 rupees be considered in the paid up capital for the purpose of Caro? Answer is yes, you have to consider that for the purpose of paid up capital when you are doing discussion about Caro. See, these are some very, very fine points. Now, sir, that 4 rupees, will it be appearing in the paid up share capital? No, that 4 rupees will not appear in the paid up share capital if you look at the balance sheet. Why? That 4 rupees would have probably been transferred to capital to shares forfeited account, and after shares forfeited account, maybe some portion would have been transferred to capital reserve also. But it would have it must be lying in the shares forfeited account or something, but you will not have it in paid up share capital. But still, for the purpose of Caro, you need to consider it in the calculation of 1 crore. Such an important point. Achha, very good. If you have any doubt or if you have any comment or thought to share, please feel free to just drop a note in the comment section. If you have understood, just mention that so that I'll also be clear that you understood. If there is any doubt, even then you just make a post so that I'll be able to quickly resolve that point for you. Right. Now, move on. Paid up capital plus reserves. Sir, when you talk about reserves, is it only about free reserves? Who said that? When I say reserves, I'm talking about all reserves. All reserves means free reserves. Then you talk about your capital reserve, capital redemption reserve, everything, all reserves included. So many times a question was asked. In Caro applicability, if revaluation reserve is for some 25 lakhs, should revaluation reserve be considered? Revaluation reserve is also a reserve, so it must be considered. Acha. Then, what if the reserve is statutory reserve? Should we consider statutory reserve also? Absolutely. Statutory reserve is also reserve, so you should consider even statutory reserves. So it doesn't matter whether it is a statutory reserve or whether it is some other reserve. All reserves and surplus will be considered. Now you will have one more problem. Sir, you are saying reserves and surplus. What if we have some accumulated losses? When I say profit, when you are considering any negative profit by default should be subtracted. So if I have P&L credit balance, means profits, profit should be added to reserves and surplus. If I have P&L debit balance, means accumulated losses, reserves should be accumulated losses should be subtracted from reserves and surplus. As simple as that. So friends, the point here is, in your calculation you will consider all these points. Acha sir, paid up capital, equity 25 lakhs, preference 25 lakhs, capital reserve 25 lakhs, and revaluation reserve 25 lakhs. Okay, fine. Now sir, tell me whether Caro is applicable or not applicable. Very simple. If you look at the condition, if paid up capital plus reserves is less than or equal to 1 crore, then that condition regarding Caro non-applicability will be met. Meaning only that condition is met. See, if it is exactly 1 crore, can I say that condition is met? Exemption condition is met, not applicability condition. Understand carefully, friends. If that amount is less than or equal to 1 crore, which condition is met? Exemption condition is met, not applicability condition. So exemption condition here is met. That is what you need to talk about. Friends, I hope you are understanding this. Okay, right. Now, one of the most common mistakes in applicability what students make is when you test this, paid up capital plus reserves. When should we look for it? At the end of the year. Okay, now we look for it. Say in a question, paid up capital plus reserves is say 98 lakhs. All right. Now, the question is, comment on applicability of Caro. You know what students will do? They will immediately conclude, paid up capital plus reserves less than or equal to 1 crore. So Caro not applicable. Arey beta, come on, how can you conclude that Caro is not applicable at this stage? There are 4 conditions. It should be a private limited company. Then it should have paid up capital plus reserves less than or equal to 1 crore. Then loans outstanding, banks, financial institutions and all less than or equal to 1 crore. Then turnover less than or equal to 10 crores. If all the 4 conditions are met, only then Caro exempt. So if just this condition is met, then you can't conclude Caro is applicable. You know how your answer should be. I can't conclude Caro is not applicable. What you should say is, it's private company. So this condition is met. This condition is met. If these 2 conditions are also met, then Caro is exempt. Like that, you will have to frame your answer. I hope you're understanding. Okay, so don't jump the gun and suddenly conclude your answers in the wrong manner. Make sure that you're reading the question properly, and maybe this only paid up capital point is given, but in your answer you should write this is okay, this is okay. If these 2 points are also covered, then Caro will be exempt. Otherwise, Caro will be applicable. So you will have to answer your questions like that. Is everybody clear about this point, what we discussed? Please, the only way you can communicate to me is by you writing a small comment so that I can move on to the next point. Right. So when I talk about loans, remember these loans which the company takes from individuals or from directors, those loans are not covered. These are loans, institutional loans. Basically, understand this as institutional loans. Institutional loans from banks, financial institutions. If they are greater than or equal, if they are less than or equal to an amount of 1 crore, then it's straightforward. Caro will not be applicable. For, that particular condition is met for non-applicability of Caro. Okay, now let us go on. If the opening balance of loan is 1.5 crores, this is how examiner will ask questions. Opening balance of loan is 1.5 crores. Closing balance of loan is 98 lakhs. Opening balance is 1.5 crores. Closing balance is 98 lakhs. Now, you have to tell whether that condition is met or not. Now, you know that the magic number is 1 crore. It should be less than or equal to 1 crore. Is it less than or equal to 1 crore? You may say, sir, it is less than or equal to 1 crore. But friends, hold on. Caro is applicable there. You can't say Caro is exempt. Why? Outstanding at any point of time in the financial year. At some point of time, that loan outstanding was greater than 1 crore. That is why what will happen? Caro will be applicable in that case. You can't say that non-applicability or exemption condition is met. Did you understand that? Okay, right. Then it is about turnover. Regarding turnover, sale of goods, sale of services, or rendering of services, both will be included. Okay, right. Now let us move to the next one. Both will be included means if there is a sale of goods of 75 lakhs, rendering of services of 75 lakhs. I will include those two and say 75 plus 75, 1.5 crores is the turnover. Are you clear about that? Okay. Then when I talk about the, 1 second, Raj is asking a question. What is the question? Why Caro? What does it do? Raj, I think you missed the initial part of our discussion. I spoke about why we need Caro in the initial part of our discussion. Did you miss the initial part? If that is the case, then just after the session is done, go back and play that part so that you will understand that question. Okay, right. Raj, move with the flow. I mean, right. So now regarding turnover, say we are a travel ticket booking company. I book tickets for Indigo Airlines for a moment. Okay. Now, say Indigo Airlines ticket is 5,000 rupees. And if I book one ticket for Indigo Airlines, I get 500 rupees as some commission. Now, the customer is paying me 5,500. And then I'm booking ticket for the customer. But actually 5,000 rupees of that will go to Indigo Airlines and 500 rupees will be my income. Now, imagine it's not a small individual doing it. It's a company doing it. Now, make my trip, then clear trip, yatra, all these are companies doing it, right? So in such a case, how will you consider Caro applicability or non-applicability? That turnover, you should not include 5,000 rupees. If you're if you're a commission agent, only the portion of 500 will be considered or included for the purpose of turnover. That 5,000 rupees is not turnover, only 500 rupees is turnover. That is an important point you need to bear in mind. And the last point regarding turnover, which I want to touch upon is, say last year we made sales and the sale was for some 9 crores. Out of that sale, there is a returns of 1 crore which happened in the current year. So returns happened in the current year. Sale happened when? Last year. Returns happened in the current year. See, all these kind of cases we have seen in the examinations. Sales happened in the last year, sales return happened in the current year. Okay, then in the current year, we sold goods worth 10.5 crores. In the current period, we sold goods worth 10.5 crores. See how beautifully examiner is trying to trap you. 10.5 crores means greater than 10 crores. You will immediately say, hey, that condition, the last condition is not met. Caro is applicable. That is what you would want to say. Hold on. Sales return of 1 crore for sale made in the last year should be subtracted. Achha, what is this? Sales return of current year we will subtract, but sales return of last year, even that needs to be subtracted. Did you understand that point? Very, very important. Sales return should be subtracted to arrive at the amount of turnover, even if the sales happened in the previous accounting period. Are you clear about it? So it's a very important point, and students quite frequently miss out on such things while attempting the answers. See, we haven't started the clauses yet. We are talking just about the applicability or non-applicability. Is there even a single point which is not important that we discussed? Nothing. So even in the applicability or non-applicability of Caro, there are so many points that we need to understand. Okay, right. Now, let us start going into some of the clauses which require some level of explanation. Okay. So, friends, I'm not. If you have Caro material in front of you, it will be good if you open that. If you don't have, then what to do? Just look at me. Right. So I want you to go to clause number 3. Yeah. I want you to go to clause number 3. Yeah. Right. Look at clause 3 in Caro. So here, what is clause 3 about? This company gave loans. This company gave loans, advances, guarantees, etc. To whom? To people who are related to the company. Go to clause 3 of Caro. I'm talking about this. Caro means what? Oh, somebody is asking me, what is the meaning of Caro? But a Caro means company auditors report order. CARO. That is what we mean by Caro. Okay, right. Fine. Not clear about sales returns. Very simple, friend. Suraj Bekal, sales returns, what I said is, if you made a sale of 10.5 crores in the current year, out of that, say there is a current year sales return of some 25 lakhs. Subtract that, okay, to arrive at that turnover for Caro applicability purpose. Subtract current period returns. Also subtract sales returns from sales made in the last year, means sale happened last year, returns happened in the current year, those also should be subtracted. That is what you need to understand. So maybe sale happened last year, returns in the current year are for some 1 crore. That also you need to subtract to arrive at the turnover to determine whether Caro is applicable. Good. Suraj is clear about it. Fine. Then another question is it important to remember details under each clause, or a basic understanding shall suffice? Good question. See, in Caro, there is nothing like important, not important. What I want you to know is you should first put yourself in the place of, say, a banker. The points regarding loans, you should read not as a student. You should read as a banker. Hey, I'm a banker. I'm giving loan. And when I'm giving loan, I'm checking these points. And then automatically, just breathe, these points you will remember. The important points you will remember. And when you remember those important points, based on that, you will write. So I'm not expecting you to by heart and reproduce those in the examination, but definitely those important points you need to understand. And my effort in this webinar is to help you understand those important points so that you remembering those points will become easier. Okay, right. Come on, let's continue with this. So here, clause 3 talks about something very interesting. So it says loans or advances are given to whom? Loans, advances, guarantees to companies which are related, partnerships which are related, people who are related, entities which are related. What does it mean? See, if somebody comes and asks me, give me 5 lakh rupees loan, I'll ask, who are you? Why do you want loan? When will you repay this loan? 100 questions I'll ask, otherwise why will I give loan? But imagine, my sister asks me, Bhaiya, I just want 5 lakh rupees loan. I might not really think second time. I will not ask her, when will you return this? Same thing with her. If I ask, she may not, if I ask for a loan, she may not really ask all these questions. She may say, hey, my brother wants loan, I'll just make it happen. So think about it. When people are related, then the transactions happen not just for commercial consideration. Transactions happen because there is some emotional attachment around it. There is something beyond just a commercial relationship. Now, why am I explaining this philosophy of family to you? The same philosophy applies even for companies. If it is a company, at company gave loan. Loan to whom? To holding company, means father or mother, parent, okay? Or subsidiary company, child, or a company which is related. So basically something like a brother or sister, sibling. So when such things happen, the problem is the companies also start becoming emotional, and what they may do is they may say, take this loan. Take this loan. When will you repay? All those questions may not come. So the point what an auditor is asking here is, you gave loans like that? You gave guarantees like that? All these things? Check. Is there any term agreed? What are the terms and conditions based on which such loans are given? Okay. So why is it important? A lot of times such loans are given without even agreeing upon the terms and conditions for such loan. So for that purpose, we are saying, bolo to sahi. When are you going to give the money back to me? What is the interest rate that you have to pay to me? So all this should be agreed upon. So the auditor is asking, and auditor has to report in Caro whether there is an agreement as per which such loan is given. So basically terms and conditions are clear, and whether those terms are prejudicial. So just because there is a need for agreement, we wrote an agreement. What is the agreement? The loan will be repayable in 200 years at 1% per annum interest rate. Which idiot on earth will give a loan like that? If only they give a loan like that, nobody will be in this webinar. Everybody will be running and trying to take a loan from that person who is giving loan like that, right? So think about it. So such loans which are given at such irrational terms, unrealistic terms, there is no point in saying, oh, there is an agreement and all. So the auditor's next job is check whether the terms are reasonable. Okay, terms are reasonable. Likhne mein kiya jata hai. So we wrote beautiful terms and conditions, and after writing those terms and conditions, we realized that nobody is following any of these. So after agreeing upon these terms and conditions, nobody is following any of these terms and conditions. Like the loan clearly has in every year interest rate is say 16% per annum. It is specifically given. Nobody is paying money as per that. They are not following. So we gave loan to a subsidiary company. That subsidiary company is not paying money like as per that. So are there any such instances? Imagine you gave a loan to some outsider and that person has to pay money, and the due date is over. Will you keep quiet? You will take action, right? So action, I'm not taking beating that person. So at least when I say action, I'm talking about maybe you would call up, some reminder, some notice, even a message or a mail is a notice at one level. Then if that is not working, maybe you will send a legal notice and you will try to file a case and try recovering that money. There's something we will do. Why will we keep quiet? Same thing, you should check whether the company is doing or not. That is what clause 3 talks about. Then friends, come to clause 7. That is one other clause where students generally make mistake. Please come, and it's a very important clause regarding government. So let us talk about that. Okay, before I go into that, just what is that? In case terms of such loan are changed in the middle of the year, will the auditor consider the same or only at the time of grant shall be taken? So basically, it's not just at the time of grant. So whatever loan, or when loans are given to these related parties, we call them, you have to check what those terms are, and even if the terms are changed, you have to check the revised terms. Okay, right. Now come to this point regarding government, things of government interest. It is regarding disputed and undisputed statutory dues. Chartered accountants pay utmost attention. I'll call you chartered accountants because I know that the day is not too far away when you have to answer these points with a lot of confidence. And I'm sure you will do it well. Okay. Now, listen carefully, friends. Here, the first thing that you need to do is divide what is disputed statutory due and what is this undisputed statutory due. Let me clarify that. Dispute. Say I'm into education sector, and I receive a notice from mines department that I have to pay 7 crore rupees of mining royalty. I have to pay 7 crore rupees as royalty for mining. Okay. At best, what mining do? I try to mine your brains and try to get the gold out of it. That's all. Beyond that, what mining do? I don't do any mining. But we received some notice like this from mining department. Say, in such case, say I got that letter. I looked at that notice. I just threw that into dustbin. Is it called disputed? No, it's not called disputed. Okay, right. Then I got that letter. After getting that notice, see, I'm not into mining business, but I got a notice for mining. So that is why I'm talking about all this. Then what I did was I read this. I took the phone. I called them up and said, how dare you send a notice to me because I'm not into mining business. Is this dispute? Yes? No? Even this is not dispute? Acha. Movie is becoming more interesting now. Okay. I now write a letter formally and respond to them saying, we are into this business. We are not into mining business. So it is not applicable to us. Please withdraw your claim. Is this dispute? I'm writing a letter. Is this dispute? Even this is not dispute. Kya baat hai? Then what is dispute? I go to the court of law and contest that. Or I go to an authority and challenge whatever letter I received. That is what I call as disputed statutory due. Did you understand that? So, to call something as a disputed statutory due, remember, it presupposes, it assumes that there is a dispute. What do I mean by that? Dispute means it's not just fighting, shouting. Going to an authority which has the capability to settle it, like a court of law, and trying to challenge this matter is when this statutory due becomes a disputed statutory due. So, for example, when I got that letter, say that case is pending with High Court. That is disputed statutory due. That is pending with Supreme Court. Disputed statutory due. Are you clear about that? Okay. Now, you as an auditor has to first identify whether those statutory dues are disputed or undisputed. The reason why it is important to understand disputed is, other than disputed, everything else comes into undisputed. I'm repeating. You have to identify whether something is disputed. These are all the statutory dues. Out of this, divide whatever is disputed based on whatever principle I just now said. Everything else will be considered to be undisputed. Clear? Right. Now, disputed statutory due, what should we do? For disputed statutory dues, if we have not made payments to government, it could be income tax, GST or PF, ESI, anything. If you have not made payment, such things should be reported clearly in the Caro, basically means it's a part of audit report. You should report clearly saying the amount pending, amount not paid is 1 crore. Under which regulation? Say income tax. Where is the dispute pending? High Court of Maharashtra. Like that, I have to very clearly specify where the dispute is pending also. Okay, right. Now, what if it is undisputed? Now, this is where most people make mistake. When it comes to undisputed, there are 2 conditions you have to check. What are those 2 conditions? First one is that undisputed statutory due must be outstanding even as on the balance sheet date. It should be outstanding even as on the balance sheet date. So if the balance sheet is prepared as on 31st March 2018, that undisputed statutory due must be outstanding even as on 31st March 2018. Clear? Second condition, that should have fallen due for payment 6 months ago or even before. Means what? We are on 31st March 2018. Go back by 6 months. Before 6 months, it should have fallen due for payment. Means it should have been paid to government authorities on or before 1st of say October, or maybe before, let us say 30th of September or before. It should have been paid off. 2017 I'm talking about. So 6 months, go back by 6 months and say 6 months ago only it was already due for payment. Still it was not paid. Still means what? Even on balance sheet and it was not paid. Only then it becomes reportable. Okay, let us take 3 quick cases. There was a statutory due which fell due for payment on 1st of September 2017. I'm taking 3 cases with which you will understand this perfectly. There are 3 statutory. The first case is a statutory due fell due for payment on 1st of September 2017. On the amount is for 1 crore. On 31st March 2018, which is the balance sheet date or financial year ending date, that amount was not paid. That amount was not paid to government. It is an undisputed statutory due not paid to government. Is this reportable or not? Yes, it is reportable because both those conditions were met. Okay, right. Now, let me change the case. On 1st of November 2017, there was an amount of 1 crore which fell due for payment and it was not paid even as on 31st March 2018. Is this an outstanding statutory due? Yes, it is an outstanding statutory due. But is it reportable in Caro? It is not reportable in Caro. Are you clear about that? It is not reportable in Caro because both the conditions are not met. First condition itself is not met. First condition is met, but second condition of it being overdue for more than 6 months is not met. Okay. Now let me go to third scenario. That statutory due fell due for payment on 1st of September 2017. It was not paid till 30th of March 2018, but on 30th of March 2018, it was paid off. Okay, right. Now, for more than 6 months, that amount was not paid. Remember, from 1st September till 30th of March, that amount was not paid. For more than 6 months, amount was not paid. But will this be considered as a reportable item in Caro? No. Why? It will not be considered as a reportable item because the amount, yes, was overdue for more than 6 months, but it is not outstanding on the balance sheet date. That is the reason why you will not make it a reportable item. Is it clear, friends? So that is how you need to understand whether an item which is statutory due, whether it is reportable or not reportable. This is how you are supposed to analyze it. Okay. If you have understood, please respond so that I will be confident to move forward. Okay. So let me just talk about some of the questions which recently we had in our examinations, and I will talk about in which clauses those questions came from. In May 2018 examination, there was a 4 marks question on what? There was a private equity and preference issue and private placement utilization. So friends, there is one clause in Caro which says whether it is from equity shareholders or preference shareholders or debentures or banks. So these are covered under 2 clauses, but I'm just combining them and discussing. If monies have been raised and a specific purpose was told at the time of raising that money, something like we told clearly, we are raising money for the purpose of constructing factory. We are raising money specifically for the purpose of purchasing shares of A Limited. We are raising money specifically for the purpose of renovating our existing factory. Or we are raising money specifically for the purpose of A, B, C. Like this, we give specifically the purpose for which you are raising. The money raised, if it is not used for the purpose for which it was raised, an auditor needs to report that in Caro. So it could be money raised from equity shareholders, preference shareholders, debenture holders, bankers, anything. So we need to report in our Caro. This is the point. So on that, this question appeared in our May 2018 examination for 4 marks. Now, how do you approach these questions, friends? When you have a question from Caro, you say this is I'm talking. Let me just take only this specific instance. You don't have to write the entire story. Bhagavad Gita, you can't start from, oh, Caro is applicable to all. Don't start there. Nobody will give you even a single mark for it. Straight go to that specific clause. If this clause is about the public issue, private placement, and whether Caro is applicable or not applicable, straight go to that clause. And in that clause, check. In that clause, check what exactly is asked for. And the first part of your answer should be summary of that clause. Summary of that clause means you don't have to write about summary of the question, summary of the clause. As per Caro 2016, what is the summary of that clause? I am not even asking you to quote the clause number. I am not even asking you to specify, what is this? Ravi Kumar, you mentioned that you sound depressed. Feel free to write to Indigo Learn. We will have a conversation on that. Okay. Don't lose your heart, my friend. If there is any challenge, we will find a way to address it. Don't worry. Right. So, friends, if there is any specific clause, that specific clause needs to be addressed. Okay. Right. Now, you just write a summary of it. Nobody is asking you to quote the exact clause. Nobody is asking you to quote the clause number. Okay. Write the summary as per requirements of Caro 2016. Summary is this. So just write the summary. Okay. Right. After writing summary, what is the next point? You will have to write the summary of what is given in the given question and analysis of that. So the second part of your answer is going to be summarizing what is given in the question and how you are going to analyze it. So it will be something like, in this case, the company raised, say, 5 crores from shareholders and used this much money for some purpose, some other money for some other purpose. So like that, whenever there is any such utilization, you are indicating very specifically there is this much money which was used for the purpose for which it was raised. Some money was used for the purpose other than the purpose for which it was raised. Like that, you will analyze it. And finally, you will write your conclusion. What the third part of your answer is your conclusion. What do you mean by conclusion? In the light of above discussion, the procedure followed by the company is in line with the requirements, and the auditor needs to state in Caro that the company complied with the requirements of Caro, or the company complied with the terms of fundraising. Or if there is a violation, you will write the auditor has to indicate, give a negative comment in Caro. See, you don't qualify Caro. Never ever in your exam use a word like I'm qualifying Caro. You can't qualify Caro. You can give a positive comment, or you can give a negative comment, or you can simply say Caro not applicable. That's all. You can't qualify Caro. Please remember this. You can give a positive comment that the company complied with the requirements. You may give a negative comment. I'm saying that the company did not comply with the requirements, but you can't say I will qualify Caro. There is no concept of qualifying Caro. Okay, right. Then in May 2018 only, for 5 marks, there was one more question, which is regarding fixed assets and statutory dues. So just now we spoke about statutory dues. Fixed assets is quite straightforward, the very first clause. So have a look at that. Then in May 2018, in old examination, so because we have the old paper also, so we had a question on statutory dues. Just now we discussed statutory dues. Then we also had a question on repayment of loans, borrowings to financial institutions. We just now spoke about repayment, and when repayment is not proper, you know what the auditor should do as per Caro? Auditor should indicate clearly which amount was not repaid. Loan to banks was not repaid. Say 5 lakhs was not repaid on time, and the delay was for say 3 months. All these details should be mentioned in Caro. Clear? Right. Then there was another question Of course, this was also in May 2018 for 5 marks. See how frequently this and how many marks are getting tested from this. So this is of course not from examination, but it is from RTP. The question is regarding frauds. If the auditor notices frauds, how should the auditor report them? If company does a fraud or somebody does a fraud on company, two types. Company is cheating somebody or somebody is cheating company. The auditor needs to communicate, he needs to report in Caro what is the nature of the fraud. So who did fraud? That needs to be spoken about. What kind of fraud is it? Is it fraud because of mismanagement of assets or manipulation of financial statements? So what type of fraud is it? So in our essay 240, we learn beautifully about different types of frauds which the company can do. So as per that, what type of fraud is this and what is the amount involved in that fraud? That also needs to be discussed. Okay, so all these points we need to write as an auditor in our Caro report. So the question is about that. Then look at one more question. So here it was again exam question only, again in May. Write short note on physical verification of fixed asset at reasonable intervals. See, directly they never spoke about answer this question as per Caro. They said physical verification of fixed assets at reasonable intervals. As per Caro, in the very first class we will learn that fixed assets need to be verified at reasonable intervals. Now, this is a very important point. Fixed assets, inventory, physical verification is not auditor's responsibility. Please don't write, for God's sake, that auditor has to physically verify fixed assets, auditor has to physically verify inventory. Wrong. That is not what Caro talks about. Caro asks the auditor whether auditor observed physical verification of inventory. What is the meaning of that? Management should do the physical verification of inventory. Auditor should observe whether it happened in a proper manner or not. So the point to be noted here is, you as an auditor, you are not the one who is actually doing the physical verification of inventory. You are observing. Who is counting? Management is counting. What are you doing? You are observing the count of inventory. And at what frequency should you do that? At reasonable frequency. If it is inventory, we have to check at least once a year. And if it is fixed assets, generally, while companies do once a year checking, some large companies can have a different policy that maybe over 3 years we will do the checking. Some assets in the current first year, some assets in the second year, some in the third year. Again, we'll come back to first asset. Like that, the company can have a policy. So like that, whether company has policy or not, and as per that, whether the company is doing or not, as an auditor, we need to check and report. Okay. So please understand the small difference between doing inventory verification versus checking whether management is doing the inventory verification. Okay. Right. Then look at another question. So here it was asked, this question was asked in November 2016. Discuss which class of companies are specifically exempt from Caro. So we spoke about applicability and non-applicability of Caro. So you have to write clearly, Caro is applicable to all companies, including foreign companies. However, for this list, Caro is exempt. In fact, I started my discussion with, after discussing the reason why we need Caro, I spoke at length about exemption from Caro. So you need to talk about those points. And you have to very clearly say, if all the conditions are met, Caro exempt. Even if one condition is not met, Caro will be applicable. Particularly for private company, we spoke about it. If all the conditions are met, all 4 conditions are met, Caro exempt. Even if one condition is not met, Caro will be applicable. So those points have to clearly come out in your answers. Okay, right. So then there was one more question, which is regarding, this is about Caro 2016 is intended to limit duties and responsibilities of auditor. See, after learning this background of Caro, do we feel that auditor's duty came down because of Caro or auditor's duty increased because of Caro? Auditor has to do more work to be able to comment specifically on these points given in Caro. Okay, see, generally if I ask you, how was the cricket match? Then you say, oh, cricket match was good. Right. Now, that is like an audit opinion. We are saying, yeah, audit, we have done the audit, so our financial statements reflect true and fair view. So that is the general point. Now, I'm asking you more specific questions. Were there any drop catches? There are 3 drop catches. Huh? That is a very specific question. I want to know that. Were there any runouts? There were 2 runouts. I want to know answer to that question. So like that, so what is Caro all about? It's not general view of, okay, financial statements reflected true and fair view. Bhai, wo mota moti answer to theek hai, but at a granular level, at a detailed level, answer to these specific questions we want. Is this done or not done? Is it okay or not okay? So tell me, based on that, will auditors' work increase because of Caro or will it decrease because of Caro? So this in no way is reducing the auditors' work, and Caro is expected to give more clarity to the users of financial statements on what audit has happened, or what has happened during the course of audit. Right, friends. In a 1-hour webinar, I can give you an overview of what this topic is. But in our regular sessions, we are soon launching our auditing sessions for CA Inter. And after that, of course, we'll launch even for CA Final. So we are launching auditing for CA Inter in this month. And those who are interested, please subscribe for those. And you can even let your other friends know that if they want the best quality conceptual learning for auditing standards and auditing subject, they can enroll for the sessions which are going to be launched very soon on Indigo Learn. Right. And thank you very much. I think we are coming to the end of the session. I just have a small point. I just have a small thought to leave with you. We at Indigo Learn put our heart and soul into making learning happy and enjoyable for all of you. And what I want each of you to do is a favor of just spread the word. Spread the word that this is a place where you get high quality education, or I would just go one step further and say highest quality professional education delivered by professionals and for professionals in making. Right. Thank you very much. And I look forward to seeing you in the next session. So I wouldn't see you in the next week, but the week after that is when I would be coming. And stay tuned. I'm sure you would have subscribed to the Indigo Learn page on Facebook as well as YouTube. You would have subscribed to our channel on YouTube. And let your other friends also know. We shouldn't be selfish just to get the benefit and not let our other friends know. If there is something good, then please take it as a personal responsibility to spread the good, and let at least, I would personally appeal to each of you, at least 3 new friends of yours who are not currently a part of Indigo Learn family. Please make them join our Indigo Learn family. Thank you very much.